Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday the 13th. Wow. It's January Friday the 13th. We got a long weekend coming up ahead with the Martin Luther King Day on Monday, so you won't be seeing me until Tuesday when the markets reopen. So the markets will be closed on Monday. We do got a few economic news releases to go over today. We'll start off with retail sales for the month of December. So back in November, we had a pretty disappointing month at 0.2%. Forecast for December was supposed to jump up to 0.8%, and it came in slightly under at 0.6%. Now, if you strip out the autos, the big ticket items, that can really kind of sway the numbers, skew the numbers to one way or another because of the big ticket items here. We got the core here, so it gives us a 0.3% back in November. It was supposed to go up to 0.5%, and it was, again, disappointing at 0.2%. So, as you recall, a lot of stores, retail stores, this week are announcing that they're closing stores and laying off people. So we can kind of see why, as they've been the brick and mortar stores have been pretty disappointed. Producer price index. This is the PPI. This is the wholesale inflation number. So this is gives us a gauge as to what inflationary numbers we're seeing on the wholesale side. Now we do look at this. It's not considered a heavyweight in terms of what weighs on the market here, but it does give some ideas as to where inflation is moving. Primarily because we're looking at consumers cost to consumer, and the wholesale doesn't always pass on any additional costs onto the consumer, so they sometimes will eat this less smaller margin. But back in November, we had a 0.4% increase. Forecast for December was supposed to be 0.3, and we had at 1.3%. So keeping expectations here. Year over year, it was like 1.6 growth there. So decent, still under the 2% from what the Fed would like, kind of in line with what we've been seeing with the PCE. And then we also got consumer sentiment. So November or December, we finished up at 98.2. Forecast supposed to jump up to 98.2 or 98.8. It kind of remained about the same at 98.1. So a little less than what forecast came in at, but more or less in line of projection. So not a big deal here for so far for consumer sentiment. We'll get another one towards the end of the month. Well, we do get two of these. We get a kind of initial one about middle of the month, and then we get another towards the end of the month, or kind of a final January consumer sentiment. Last but not least, we got business inventory. So back in October, it dropped about 0.1%, and November it jumped up to 0.7%. So that's obviously a good sign that businesses are increasing inventories here. Today's stock market's a mix. It started up quite a bit. The Dow was the only one that kind of dipped so far. We had our first earnings reports from at least the three major banks, which would be Chase and Bank of America, came in at good numbers, but Wells Fargo, with the whole kind of scandal, came in disappointing. So for the most part, it's kind of showing that the economy, that pricing's looking pretty good, and the big banks are kind of leading the way. So they think they're going to fare much better once Trump takes in, because of the discussion of possible deregulation. So that's some of what they're looking at in terms of where the banks are. Oh, excuse me about that. We jumped ahead a little too quick. So here's the bond market. After a poor sale on the auction, we did have a big sell-off. So we dropped all the way down to about the first level of resistance in the 50-day moving average. So we dropped all that gains we had. We dropped. Today we started about the same, and we were actually down about 40 basis points. So this morning we had a pretty bad rate sheet, or at least compared to what yesterday's were rate sheets. So we did have a alert to lock here, primarily because we lost a lot of those gains, and then of course dropped. It was not that a lot of lenders were repricing for the worst, and then today we came in with worse pricing than where we left off yesterday. Again, about 40 basis points. But since this morning we did pull back a little bit. So right now we're about 22 basis points lower than where we left off yesterday. So if this can kind of shrink up a little bit, this could help us out a little bit. For the most part, it looks like sellers, because of poor auction, they may have felt that was an overbought position, so they decided to sell off a lot of the stocks and reposition themselves, or bonds. And then meanwhile, you'll see the 10-year Treasury had jumped up a little bit from like around 2.33 to like I think it was like over 2.4. So they compete for dollars, and that's what we're kind of watching, the yields on the 10-year Treasury. All right, so today, again, the pricing did worsen up for interest rates where we left off yesterday, and again, we won't be open until Tuesday of next week with the long weekend here with Martin Luther King Day. Hope you guys enjoy your weekend. If you guys want to continue getting more updates on the economy or where the market's moving, just step over to Twitter. You can find me at Mike Bjork here, and you'll get your updates. All right, guys, have a great weekend. I'll see you guys on Tuesday. Thanks so much for watching. Bye-bye.